Perseus Mining this morning, delivering record gold production, beating its last quarter, in fact, by 12%. To get more and the detail, we're joined by Managing Director and CEO Jeff Quartermaine from Perseus Mining. Jeff, nice to see you there. Thank you again for joining us here at AusBiz. So, you're getting a lot of gold out of the ground. At what cost, though?
Well, our cost is almost a record low for us. In fact, it was $879 US per ounce this quarter, which was 12% below the total in June, and as I said, the second best in our history. In fact, so Perseus is running somewhat against the trend. We're bringing our cost base down and generating fairly substantial cash flow as a result of that.
Yeah, and so how do you keep cost under control? Because I've spoken with so many explorers and miners, and actually companies right across the board in every sector that are just having a real tough time controlling those costs.
Well, a lot of hard work is the simple answer, but look, the reality is this: our mines are in Africa as opposed to Australia, say, and we see different priorities in that part of the world. So we are also experiencing headwinds from the supply of various goods and services. However, the challenge for us is to continue to find ways of improving the efficiency of our business, and inevitably inflation backfills those improvements as we achieve them. But that is the task that is in hand.
Now, Jeff, when it comes to that cash flow, cash flow from operations, 112 million US, that's a 32% increase from the prior quarter. What's the plan for that cash?
Okay, well, look, at the present time, we've got about $350 million US on the balance sheet, gross, or 329 million after you take our debt off. We do have a very large project coming forward in Sudan. We're looking to develop the Block 14 project that we acquired earlier this year. And we'll be looking to make an investment decision around the middle of next year. By that stage of the game, we'll have sufficient cash on balance sheet to fund it 100% from existing cash reserves, if we so choose to finance in that particular way. So that's clearly a priority for us in the short term. We would also like to continue the growth of the business. The markets are relatively weak at the moment, and there may be opportunities to combine with other companies to continue our growth. But also what we're looking to do is to maintain implementing the dividend policy that we implemented a year or so ago, where we generate a guaranteed yield of 1% for our shareholders. But if we have surplus cash or cash surplus to our needs for reinvestment, then we'll return that to shareholders as well, either through bonus dividends or share buybacks, as the case may be. So we have a fairly clear capital allocation plan going forward, and the business is looking very strong.
Yeah, what's the demand side of the equation looking like, Jeff?
For gold? Well, look, I mean, it's gold is a little different to base metals, of course, where there's industrial application. The demand for gold comes from two avenues, realistically. One is people see it as a store of wealth, a hedge against inflation. And of course, then in some of the developing countries, it's reviewed, as a means of, I guess, keeping their money or their wealth. So jewelry and things like that is very much a large use of gold. But certainly the issue around hedge against inflation is terribly, terribly important. In the short term, with US dollar interest rates going up and the like, the strength of the US dollar is pushing the gold price down in the short term. But in the longer term, whether the US are successful in containing their inflation is yet to be seen. And under that scenario, a hike in the gold price could certainly be on the cards. From our point of view, it doesn't really matter. We focus on our cost base, and we do that believing that we can continue to operate and be successful under any pricing scenario. But clearly, if the gold price does run, Perseus is very well positioned to take advantage of that.